GMP Capital is facing some pushback in its efforts to restructure its business, including from its former CEO and from one investor group. Chairman Donald Wright is with us now. Thank you for being with us, Donald. And let's just start with the terms of the deal itself, because it seems that at issue here is really the valuation of what's being offered for this asset. So I did want to start with your lens on why this is a fair deal. I think we've lost Donald Wright. We do hope to get him back in a moment here. We're going to take a quick break, though, back on the other side of it. Well, maybe we have him. Donald, are you with us?
I am. Thanks, Amanda.
Okay, good. So I don't know if you could hear my question, but it's the real question is, why is this the right transaction in your view?
Well, we've been working as a special committee for quite a long time trying to get this deal done. And we've signaled to shareholders for quite some time that we're moving in this direction with the sale of our capital markets business. And so we put together a special committee. We looked at every different possibility and alternative that we possibly could. And we came to a transaction that I think is a solid transaction. It's fair and balanced to all the participants. And, you know, as you can probably appreciate, doing a transaction where there's three parties involved, the investment advisors, GMP shareholders, and the Richardson family, is not the easiest thing. The more participants, the more difficult it is. But I think we came to something that is fair to all of our shareholders.
The concern is that the valuation is too low, Donald. So can we justify the price that the Richardson family is paying for the stake that they will get in this asset? I saw Anson suggesting that the common shares should be valued much higher than this deal values.
Well, I differ with them, obviously, because, we went out and hired great legal advice and one of the top investment banking firms in Canada to help us with valuations and a fairness opinion, i.e. the Royal Bank. And we came up with numbers that I think are fair. It was a very contested sort of discussion between ourselves and the Richardsons to come to grips with what the price should be. Obviously, there was difference of opinions on numerous things. We made compromises, they made compromises. And at the end, the most important thing for us was that we were buying a trophy asset, that we had the best advisors, that we had a great balance sheet at the end of it, and we had a tremendous brand that we could sell across the country to our IAs. So, I think that it's fair to say that, people criticize sometimes that they've gone from 33 1/3%, which was in the initial agreement, to 40%. And we did that basically because we wanted to keep more cash for our balance sheet so that we could grow this business as we finish this transaction. And I think it's very important to have a strong balance sheet so that we can recruit a lot more IAs and grow this business in an environment where assets in the wealth management side are expected to go from 4.4 trillion currently to 7.7 trillion by the end of the decade. So you can see there's tremendous growth opportunities.
But it is, of course, the value inherent in the business and those growth opportunities that has led the dissidents here to say they're being underpaid. One thing that has been raised is the one-time dividend, Donald, and I think there's been a suggestion that that's not up for negotiation, but that sweetening that dividend, it would seem, might well change the view of those minority shareholders. Is that on the table?
It's not on the table. We think that the deal that we put forward is a good balance. We put forward a 15-cent dividend, and you may recall that when we sold the capital markets business, we also did a special dividend of 27.5 cents. So when you put them together, we basically will have paid 76% of the money that we received from selling the capital markets business, and we believe that the rest of the money is necessary for GMP to keep so that we can grow the wealth management asset.
Is it possible that this minority group could block this transaction?
Well, anything's possible. We would like to think that when people have a chance to read our circular and to see all the positive things from the point of view of growth and what can happen over time here, that they'll come around to our way of thinking in terms of this being good for the shareholder. Really the dissidents, everything that they're asking for boils down to more cash. And I guess our view is that we need that cash to grow. And I think it's very, very important that we keep that money within the system.
How important is it to get this deal done?
It's very important because, if we don't do this transaction, and I might add that we have 97% of the IAs representing 97% of the assets under administration on side and having signed support letters on this transaction. If we don't do this transaction, one, of course, the special dividend won't be paid, but secondly, it'll add some uncertainty to the wealth management side of our business, and that may well cause us to lose some of those teams which are incredibly important. They're the motor, the engine that will lead to our growth. So it would be very disappointing to lose the vote. It's always possible, but as I say, I think that our rationale that we've explained in the circular is such that people are concerned about capturing some wealth on the upside, that they'll vote to do this transaction.
All right, Donald, great to have you with us. We appreciate it today. Donald Wright is the chairman of GMP.